What I'd like you to do is imagine that you're on Dragon's Den. And Doug, well, as it was in the first series, or maybe Deborah Meaden, as it is now, has got you in her steely gaze. And she's about to ask you the first question. And I'd like to see how confident you feel you would be if she started asking you a question about your gross profit, your break-even, or your working capital. And if you're sitting there feeling quietly confident that you could answer that question, then you've got a long way to my first point, my first tip for this evening, which is to understand the basics of finance, to understand the language of finance and business. You know, entrepreneurs, when they set up an enterprise, take a lot of risk, but it's a balanced risk. And one of the second most frequent reason why businesses go bust is poor financial management. So if you're setting up an enterprise, it's got to make sense to reduce that risk by getting on top of the finances and understanding the basics of financial control and financial management. Now, my background is finance. I've been finance director of a number of companies. I've worked for venture capital-backed businesses, which we've sold in trade sales to other bigger competitors. And what I'm doing now is, my mission is to convey to everybody the essence of finance and to explain finance to entrepreneurs, and in particular young entrepreneurs. And I start pretty young. We've got 3 children at home. Our solution to the pocket money conundrum is they have to do jobs and earn money. And what they have to do is they have to write those amounts in their own invoice books. So they've all got their own invoice books. The sad bit about it is they're duplicate invoice books. And at the end of the month, they tear off the first sheet and use that to settle their PayPal account. But what I'm trying to convey is that if you're setting up in business, my first point, switch on your financial side. It's an essential. I used to work for Paul Smith, who invented the game show Who Wants to Be a Millionaire. He used to say, don't start in business unless you're prepared to negotiate the cleaning contract. And I would put finance in the same area. Don't start up in business unless you're prepared to get to grips with finance. So my second point, which is going to be slightly controversial, I'm sure you're expecting me to say cash flow, cash flow, cash flow. Well, my second point is this, is documentation. It's uncanny how when things get tough, undocumented agreements start unraveling. And I would really urge you just to take a quiet moment and go through any agreements that you've got that aren't documented. I'm not saying get hold of lawyers and incur big expense. Fire off an email. Memorandum of agreement, this is my understanding of what we've agreed. But it's uncanny how, when things get tough, unwritten agreements can unravel and bite you. The third point, you need to know where you are. You need to know who owes you money, who you owe money to, what's in the bank, and how much cash you've got. And today, with software, there's no excuse not to do that. It's so cheap and it's so easy. You've got well-known brands like QuickBooks, Microsoft have got a free accounting system, and there are online tools like Pearl and Cashflow. There's no excuse not to have that information to your fingertips. And those key items, what you owe, what's owed to you, and the cash in the bank, that's your working capital. And that's the sort of lifeblood of the business. That's, if you will, your ammunition. That's what you're going out there to do business with. And if you don't keep track of that and manage it, you're going to run out of ammunition. So what do I mean by that? Well, at Complete Video, for example, what we used to do, we used to have a weekly meeting where we'd look at our debtors ledger, our age debtors as it's called. That's the amount of money that's owed to you by your customers and showing how long it's been before they've paid, how long it's been outstanding. And we would go through that line by line and identify those customers that were posing a risk, and we'd do something about it. When you start up in business, it's a big shock to a lot of people, and especially, I think, people that come from big businesses. They have no conception of how difficult it is to get money out of people. It just takes forever. If you're selling to advertising agencies, you're looking at 90 days possibly before you're going to be paid. My wife runs a gardening business. She has to chase for money. Frequently, it's the people with, a couple of kids at private school and a Mercedes in the drive that don't pay, and she's got to get on the phone. So Bill, if you're watching this at home, can you reach for your checkbook, please? Okay. So the point is, people don't pay. You've got to have a process to manage that working capital and to reduce the amount of cash that's tied up in your working capital. When you know where you are, the next stage is to look ahead. You've got to be able to see what's coming around the corner, which means having a forecast, a cash flow forecast, going out at least 6 to 9 months. Because the one thing that the money men hate is a last-minute request for cash and finance. You can have a really good business proposition, but if you come to them saying, I need more money in a couple of weeks, forget it. You're just on the back foot. It's not going to work. You've got to have that forecast going out at least 6 to 9 months.